Hi everyone, I'm Sarah Akar from Armitage Private. Today I'll go through some of the key highlights for the week ahead and some overviews of the week that's passed. So to start off with, today we should see housing figures for October be released. Tomorrow the ABS will release house price index, and NAB's business conditions and confidence surveys for November will also be released. Westpac's consumer confidence index will be out on Wednesday. Focus will be on inflation for the rest of the week as CBA and Melbourne Institute of Applied Economics will comment on their inflation expectations for December. US posted its biggest weekly decline since early Feb 2018 as the S&P 500 was down 4.6% after the White House advised that tariffs on Chinese goods would rise if the world's two largest nations could not come to a trade agreement. In addition to the underwhelming economics data that was released recently, technology and communication services were hit the hardest, while the defensive utilities sector was the market's favourite. Australia's GDP growth of 0.3% for September quarter missed the market expectation of 0.6%. This took the annual growth rate to 2.8%, well below the forecast of 3.3%. The Aussie dollar also fell for the week. The official retail sales data has hit market consensus and soothed fears around an Australian consumption slump. Falling house prices and high petrol prices have been major headwinds. Oil eased its losing streak since early October, after OPEC, to the market's surprise, agreed to cut production of 1.2 million barrels a day, defying a plea from Trump to keep the taps open. Low prices have been hurting the finances of the oil producers. A rally in oil prices saw the airline and transport finishing the week lower. For instance, Qantas was down 4.51% for the week. That's all I've got for today, guys. Thanks very much for listening.